Beyond marking point A and point B for connecting your trend line, there are more to it. And in one of such challenge that you will have as a trendline trader is such as I'm about to share with you. What if I have marked this point A and point B such as I'll be doing now? I just mark my point A and my point B using my trend line. And look at what happened afterwards. Afterward, you notice that price came through and break above the trend line. It break above the trend line for a while and still return back into the trend line. So in this situation, how do you handle it? So in this video, I'll be sharing with you the best way you can trade the trend line trading strategy. It's important for you to know that most of the things you come across in a textbook and in some other perfect scenario are not real market-based situation. So just as you are seeing now is what most of the time you come across. You come across a situation where you see price break through the trend line and again price moving in that direction. So how do we handle in this situation? So let's look at more on this, on how we can trade our trend line trading strategy. This is a current market scenario. So what is a trend line? Of course, we will only have a trend line. It's a technical tool that we use to identify structural direction. It can help us to understand the market bias in most of the cases. And for you to connect your trend line, you will always need 2 points for you to be able to connect an accurate and precise trend line. It means that in an uptrend, you will need a low, a higher low, and another higher low. So what that means is that you will need price to move this way. So this is your a higher low, this is another higher low. So for better understanding, we will say that this is point A and this is point B. So you will pick your trend line and then you connect your trend line to this point A and point B. So from point B, price is expected to move this way. That is what will give you point B. So what is the next thing? Your entry, which means your buy trade in an uptrend such as this, your buy trade is going to be point C. So which means that you are expecting this price to return back to this trend line. And when it returns back to this trend line, it is expected to give you a buy signal depending on what your entry confirmation is. And then immediately you get that signal, you can now take price to the upside. So here, point C is supposed to be your entry. And then subsequently, as price keep coming, you keep on making entry. And for a downtrend, you will obviously see something like this. The price will come, go up, come like this, and then we have this connection. So we have this price movement and we have this. So this is your point A and this is your point B. So what do you want to see? You want to see price pull back to your trend line, giving you point C, where you will be getting your sell entry from. So your sell will be from somewhere around this zone, and then you sell and then you continue in that direction. But this is a perfect textbook example. 80% of the time, you won't find the market playing out exactly this way. And you keep wondering what is going on. What are you doing wrong? The truth of the matter is you are not doing anything wrong. It is just a knowledge gap that you need to have. There are instances where this point C will come, break through this trend line, obviously come all the way to this side, and then continue again to the downside. And you have already sold here and it take you out and continue in that direction and you keep wondering. Like I said, it's a knowledge gap, and that is why you need to watch this video carefully and pay attention to every detail that I'll be bringing your way in this video. So let's go to the chart and see exactly what is happening on our trading chart. This is Euro USD, and if you look at this carefully, we want to mark our trend line, and let us begin by identifying our level. So first of all, this is point A, and then this is our point B, because of course this is a trend. So we are seeing this at this, and then we want to see this. So which means if we connect our trend line, this is obviously a downtrend. So we'll be connecting our trend line and to see exactly what we have. So now this is perfect. We have connect our trend line. So here is our point A and here is our point B. So we are connecting trend line to 2 points, a 2 touch of price. First touch, price left, it came, price went back, second touch, then you connect your trend line to this point and this point. So upon the third touch, your trend line should be your entry. In this case, it will be a sell because this is obviously a downtrend. So in this case, you'll be waiting for price to pull back to your trend line so you can have your sell trade. And of course, if you watch our previous video, I've talked about the major 2 types of candle that you need for your entry confirmation, which is a bullish engulfing or a bearish engulfing, and then the pin bar candlestick formation. If you don't have much understanding on that, it's advisable you watch the previous video. So let's look at what happened here. So, and as you can see in this price scenario, price actually plays out. So let's assume this is point A and this is point B. So at this point, price pulled back here, but price did not touch the exact point of the trend line. Now this is one of the first challenge we need to take note of. Price did not touch the line in particular, but we have a little reversal. What does that tell us? This simply tells us that when it comes to trend line trading, you don't just trade around only this line. You have to treat this line as a zone. So you need to have this mindset that this line, you can double it with another trend line on your own in order to have a clearer understanding of what you are doing. So you can choose to put another trend line this way, beside it, leave a little space, and then you are treating this line as what? As a zone. So this is a zone. Okay? Now, and then look at what happened after that particular play out of price. Now, after this particular play out of price from this zone, after this particular play out of price from this zone, of course, you can see the confirmation for that entry. You can see those bearish pin bar. These are bearish pin bars. So, if you would have do what? You would have sold a little to this point and then price reverses. Now, another way to confirm this entry is that as price is pulling back towards your trend line, you can pick up another trend line and trap the price in between. You can trap the price in between like this. So as soon as price break out of it from this zone, you come in with your sell entry. So however, let's pay attention to what happened afterwards. So here we have this particular price movement around this zone. So look at this. So we have our point. This is point A and this is point B. So price now pull back towards our trend line. And look at what happened on this trend line. Price actually break out of this trend line. So you can see that. So price break this trend line and then price played again. So obviously you should have missed this entry because you were expecting price to touch the line precisely and then return back. And price did not do any of that. So the question is, what exactly happened? And how can this be handled? How can this be managed to avoid future recurrence as far as your trading is concerned? What you must know is that this price line, this trend line must be treated as a zone. And then secondly, if you want to connect your trend line, first connect it to the body of the candle and also the wick of the candle. I am referring to the zone you are connecting it. So look at this trend line here. You can see this candle. This trend line will be at the body, and there is also still a wick above this point. So our trend line was supposed to be on both sides. Do you see that? That is to the wick of that candle. And then look at this one. And this one is to the body of the candles. So you can see this, and then you can see this. So this will now help you to treat all of these points, all of this area as a zone. So whenever price comes into any of this area, you are treating it as a zone. So you can see this point, price will test this as your point C. You would have sold here. Price went back again. Look at this one. Price went out without going far from it. Okay, it didn't go far from it. It closes back inside. You are meant to sell again because you can see double confirmation, a hammer, the price keep rejecting. So you are meant to sell, and then you see how it is playing out. So what we have, most people don't have this idea. Here is a liquidity sitting. So this price push all the way here to take away this liquidity that is sitting here. And that is why we must take recognizance of the rejection, the pin, when we are marking our trend line. So how you mark it is very much important. Then how you apply it is also very, very important. And another way we can handle this is this. Already price left here and it came here. This one went all the way back. So you can as well mark your order block. Don't worry, we have not discussed order block on this channel. So in the subsequent video, we'll be looking at discussing order block. So what do? You are meant to mark your order block. So you see, if you look at these zones that I marked, what price did? Price went back to retest this point B order block perfectly. Perfectly. So price will break the trend line to manipulate you. But this idea of your order block being marked will now put you in an advantage over the market. Even in this scenario, you realize that the order block was what the price mitigates in that zone. So let me show you what I'm saying. That is the order block. So you can see that here, even this price pull back, tap into this other block to give us point B and it continue. So the next thing is just for you to do is to shift it to this next order block. So even though it break out of this trend line, provided it does not break out of this other block, it is still a valid zone. So that is just the most important thing and one of the things you need to take advantage of when trading trend line. It's just like a support and resistance. But in this case, it is a dynamic support and resistance because it is slant. Whereas, as for the normal support and resistance that you know, it is static. So you won't struggle much with it. So let's look at in an uptrend scenario. Yeah, I have this marked out and you can see exactly what happens here. So here what happened, this is our point A and this is our point B. So we have our trend line connected to this point perfectly well. So how do we trade it? You are waiting for price to come back. First, you need 2 points for you to connect a valid trend line. So this is our first point. I'll call it A, point B. So we have it connected. The next thing is you want to buy. So how will you buy? You'll be waiting for the pullback, the third pullback to the trend line for you to buy. Now look at, in this scenario, price pull back, but did not get to the trend line. So will you continue to wait forever? It pulls back again. The other time it came, did not get to the trend line. So what do? Immediately this first one play out and it did not get to it, two things you will do. You can use another trend line to mark that zone. So you can pick up another trend line and mark this zone. So price came here. So you can see. So what now happened? price as it's coming, you miss this one. No doubt this one have gone, but look at the subsequent one that comes. When this one comes, you shouldn't have missed that particular entry, even though you missed this first one because it did not touch your original trend line. But for that idea, you have connected the trend line there. And look at the second pullback. You would have been in this trade using this pin bar candlestick formation. Now you are wondering, so what has happened? What has happened is when the trend of the market, the momentum gets stronger, it might not have that 100% pullback that you are expecting for it to happen. There are still other factors. There might be imbalance in the case. There might be a smart money cube, price will fill it and price will retest. You don't need to worry. We have you covered. We'll be discussing all of those things and how you can effectively take advantage of it. Another way you will not be able to miss entry is that as price begins to pull back, even if you don't have this initial one, this is the original one you have. As price begins to pull back, just pick up your trend line, another trend line, and trap the price in between. Do you see that? You trap the price in between. So what are you doing? What is the next thing you want to do? You want to see price do what? You want to see price break out of this trend line. So immediately price break out of it, you test it, or you just break out of it, you buy, you put your stop loss below here, and then you see that it plays out. In this scenario, the same thing. All you need to do, you pick up your trend line and you trap the price. So what happened? Price break out of it, it did not get to this zone, you buy. So that is another way you can handle this. And I believe you have learned something new. Please do not forget to give this video a like, share, subscribe, turn on your notification bell so you'll be the first to get notified when we upload our next video. And in the subsequent video, I'll be showing you exactly how you can use the indicator window, which is this indicator you are seeing, the RSI and the CCI, how you can incorporate it into trading this strategy effectively. Thank you and see you in our next video.